Today we'll discuss the fundamental analysis, the economic analysis. The investors are concerned with those forces in the economy which affects the performance of an organization in which they wish to participate through purchase of stock. From their point of view, the discussion of economic environment is very important. That is so not from the point of view of the policymakers, but an investor, and this should be borne in mind. A study of economic forces would give an idea about future corporate earnings and the payment of dividends and interest to the investors. Some of the broad forces within which the factors of investment operate are. First one is the population. Population gives an idea of the kind of labor force in the country. In some countries, the population growth has slowed down, but in India and in some other third world countries, there has been population explosion. Population explosion will give demand for more industries like hotel, residence, service industries like health, and consumer demand like refrigerators, cars, etc. Increase in population, therefore, shows a greater need for economic development of the country. It does not show the exact industry which will expand, but in those countries where there is high rate of population growth, the labor intensive industries will have a greater generation demand. Likewise, investors should prefer to invest in industries which has a large amount of labor force. Capital being rare in those countries, labor intensive industries will grow. Next is research and development. The economic forces relating to investment would be depending on the amount of resources spent by the government on a particular technological development affecting the future. Broadly, the investor should invest in those industries which are getting large amount of share in the funds of development of the country. For example, in India, in the present context, automobile industries and space technology are receiving greater attention. These may be areas which the investors may consider for investment. Next is capital formation. Another consideration for the investor should be the kind of investment which a company makes in the capital goods and the capital it invests in modernization and replacement of assets. These, to a large extent, are dependent on the economic factors of the country. The gross national product of the country should be carefully analyzed. A particular industry or a particular company in which the investor would like to invest can also be viewed with the help of economic indicators such as place value, property position of the industry, group to which it belongs, and the year-to-year returns through corporate profits. Next is the natural resources and raw materials. The natural resources are the large extent responsible for the country's economic development and the overall improvement in conditions of corporate growth. The discovery of oil in the Middle East countries, the discovery of gas in America created great change in the general economic pattern and the investment of those countries. In Japan, government found raw materials in the form of labor force much suited for the developing country. Technological discoveries in recycling of materials, nuclear, solar energy, and new synthetics should have given the investor an opportunity to invest in the untapped or recently tapped resources. Next is economic forecasting. All industries in the economy do not grow at the same rate. After considering these broad economic forces, which are demographical in nature, the investors should make an economic forecasting for taking a decision on investment in stocks. It is important to forecast the economic environment basically because the investors purchase the investment at right time and when it is getting a proper resource to help it to grow. The investor will receive a gain on the amount which he has invested. Time is crucial because if an investor operates his investments during the time of strike or during a disturbed state of the capital market, then the rate of return which he will receive will not be high. Favorable conditions will give him good rate of return because the profits of the company are based on the key economic factors like labor, government, political climate, development in technology, and availability of finance and tax treatments. Next is economic indicators.